All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES extended lower below the 22 to 24, which was the balance area low. And that was a scenario that we talked about in yesterday's recap video, that the expectation was that the selling would not just stop right here, that we would extend the range lower and then perhaps balance at some of those lower prices. So that's what we're seeing right now. We had supported 1275 to 1475. That attracted buyers, and now we're bouncing a bit heading into the open. So right now, contextually, we know that our bias is clearly bearish, but at the same time, we've moved from 1866 all the way down to the 14s in pretty much one session. That doesn't mean that we can't extend lower. The kind of major inflection point in the market is a bit lower, closer to the 1795 to 1800, 1801 range. That's a really key inflection point in the market. And so, it doesn't mean we have to get there today, but it also doesn't mean that we can't, test 10 half to 12 half or a little bit lower and then start balancing. So right now the focus is still going to be more on the short side, but with the understanding that the market has moved quite a bit, in 24 hours, and we could see some buying activity down here below balance. It's the first time that we've really, broken below it, and we could get some responsive buyers active below the balance here, and get some rotations back up towards initial resistance, 27.5, 29.5. That's definitely possible on the day time frame. Holding below 22 to 24, tells us that sellers are in firm control, right? That's below the balance area, and as long as we hold below it, it just lets us know that the sellers are pressing here, and the buyers are still quite weak. So we're open to the long side, but only if the market is short-term exhausted, heading into a pretty good support zone. And it means that ideally we want to see kind of a straight line push into a support zone, not the market balancing and then breaking into it. Overnight, if you saw, we made a straight line push from like 26 all the way down to that 1475 support that we had, and that ended up resulting in a bounce because it was good support and the market was short-term exhausted and overextended now. So those are types of long setups that we can consider, but we don't want to buy kind of in the middle of the range or too close to resistance, because we know that the momentum is still on the sell side, and bigger picture, if we hold below 22 to 24, the market could be heading down to closer to that 1795 to 1800, 1801 range before we get any larger time frame buyers involved in the market and get a bigger bounce. So for now, I think it definitely calls for being cautious on the long side, being conservative on your entries and exits on any long setups, and then on the short side, holding below 22 to 24, we can try to find some spots, but we have to just keep in mind that the bounces can be a bit sharp too. Now, I'm not expecting a very sharp bounce, like we got the first time we moved down into the 30 range, 1830, 1832. At this point, this is a zone that's already been tested several times, and now we're breaking below balance. So there's more conviction on the sell side now, and for that reason, I'm not expecting a big bounce on the day time frame. So if we bounce back to initial resistance, that would be a short. 22 to 24 area is held. In pre-market, that was a short. And at this point, we're going to have to find a spot in real time to see if we can find something. But if the market is, if the market does not bounce much and doesn't give us good location, then it's better to be patient and wait for a good spot. You don't want to enter kind of in the middle of the range, in the middle of chop. Overnight VPOC I think is around 18.5 or so. You can get some rotation, some balancing around that level. So you don't want to, just kind of take a stab and then just get chopped up. You want to wait for a good spot to get involved in the market. So we know that the focus is more on the short side, so we don't have to look for much. As long as we're not seeing any signs that are telling us that this is shaping up to be a kind of a reversal back up towards 35 to 38, which will be obvious because we won't see really high tick readings to the upside. We shouldn't at least see very high tick readings to the upside. So as long as there's nothing telling us that this market is heading a lot higher, we can simply fade the resistance zones pretty much blind. Again, unless there are some very clear signs telling us, no, be careful here, we pop back up to 27.5 to 29.5, that's going to be a good short on first test. If we pop higher and go up towards 35 to 38, that's going to be an automatic short on first test. So, on the short side, you really just, all you have to do is wait for the market to pause a bit or just give you a really good location and you can take the trade. On the long side, it requires a little bit more timing, a little bit more precision and management of the trade. So on the long side, you just have to be willing to skip some setups. That's part of being selective. Part of being conservative is that you're not going to nail every single swing in the market. So if it comes down and it looks like, this could still liquidate lower and it's heading into support, but, it's really heavy heading into it and, the start of the move is only 4 or 5 points away, let's say. Let's say if we're heading into pre-market support, 10.5, 12.5, but the move really accelerated from 14.5, well, then you probably want to skip that zone because it's not going to be short-term exhausted. But if we go from, 14 or 15 all the way down to 0.5, right? Well, now, you're going to be about 10 points in a straight line. It'll be exhausted, so you could get a bounce. Higher odds of getting a bounce in that scenario. So for the long setups, you do have to read it more closely in real time and still be careful and get ideal location in order to get better reward to risk out of the trade. Otherwise, just be willing to skip the long setups in this kind of environment and keep your mind more focused on identifying the good spots to enter short. So that's the plan for today. It is Friday. We could get some profit taking at the support zones below. Keep that idea in mind too. Overall, expecting maybe a 20 to 30 point range. Not really expecting, a wide range like yesterday. Typically, after you've had that wide of a range, the following day is not going to be quite as extended. So, 20 point, 25 point range would be in line with what normally happens. And, we are running pretty decent volume today. So far, even better than yesterday. But despite that, I don't think we're going to get a extremely wide range. I think 20, 25 points is probably what we're looking at right now. So those are our main ideas. And, let's see how well the sellers can hold it together. Off the open, 22 to 24 being a key spot. Holding below that, sell side in control. And on the downside, again, we can expect some range extensions, followed by responsive buyers, and then bouncing in a range. So those are our main ideas. Let's see how well the sellers hold it together today, and we'll take it from there.